People are talking about roll-ups, partnership, platform. There was even a Wall Street Journal article saying, plumbers are the new multimillionaires across America. So that's not random. It's a movement. Right now, Wall Street is obsessed with Main Street. And if you understand how they make money on your business, you can really start to flip the power dynamic and win on their field. Hey everyone, I'm Oliver Bogner, managing partner of the Advisory Investment Bank. We're a lower middle market investment bank focused exclusively on all things essential services. HVAC, plumbing, electrical, pest, landscaping, turf, fire safety, FERT, elevator repair and maintenance, accounting. If it's an essential service, we cover it and we know how to sell it. I'm a 2 times Forbes 30 Under 30 honoree, 2 times Inc. 5000 CEO, and we are a 3 times top 5 lower middle market investment bank. Just this last week, we were named number 3 lower middle market investment bank versus 4,000 other investment banks by Axial, the preeminent guide for all things lower middle market deals, brokers, investment bankers, and all things deal making. So today in the video, I'm going to break down why Wall Street is obsessed with Main Street right now and what it means for you, an essential service business owner. So today, if you're running an HVAC, plumbing, pest control, landscaping business, you've noticed a couple things. Buyers are calling you. You're getting a ton of private equity emails. People are talking about roll-ups, partnership, platform. There was even a Wall Street Journal article saying, plumbers are the new multimillionaires across America. So that's not random. It's a movement. Right now, Wall Street is obsessed with Main Street. And if you understand how they make money on your business, you can really start to flip the power dynamic and win on their field. Right? So number one, we're calling it the Great Migration, why Wall Street is moving downstream. So venture returns have really cooled, interest rates have risen, institutional investors really started looking for something new, steady cash flow, real assets, and they found it in essential services, HVAC, plumbing, pest, fire safety, electrical, landscaping, pools, elevator. These industries are amazing because they're recession resistant. It's all recurring revenue for the most part. Again, recurring revenue is really important. We've talked about that in other videos, and it's still very, very fragmented. There's thousands of small founder-led companies generating 20+% margin, and Wall Street started to realize Main Street was the last untouched gold mine in America. So number 2, private equity has to buy fast. They've raised billions of dollars from LPs, and they have 3 to 5 years to deploy that money. If they do not buy businesses, they don't get paid. We've explained in other videos how private equity makes money. They get paid on this concept of 2/20. So for every dollar of assets under management they have, they get 2% annually as their management fee. They then make 20% on the back end, whatever the profit the strategy makes. So every aggregator, every strategic has one mandate. Buy businesses like yours fast, win the deals. How they do it. They don't just make money when they grow your business. They're not necessarily, I think there's a lot of misnomers. Private equity is trying to just cut costs and fire people. That's not it at all. They don't make money when they just grow your business. Of course, they want to grow your business, but they truly make money the moment they buy it through a concept called EBITDA arbitrage, which means if that business is worth 7x, that they just acquired and their platform is worth 15x. They literally doubled their money on paper without doing anything. Then when they get buying power, efficiencies, back office, HR, payroll, benefits, all those other efficiencies of scale, this concept of 1 + 1 = 4 really goes to work. They really make money on this concept of 1 + 1 = 4. So number 3, the hidden math, right? How are they profiting on the spread? So we're going to break it down. You own a $2 million EBITDA HVAC business. Private equity platform doing $20 million of EBITDA offers you 8x to buy it. So that's a $16 million value for your business. Now that same platform is currently valued at 15x. So when they acquire you, your $2 million of adjusted EBITDA gets rolled up into their overall platform and it gets re-rated from 8x to 15x. So suddenly that $16 million company that they just acquired becomes $30 million on paper, literally the day the deal closes. So those guys that just did that deal with you, why they're so aggressive at chasing these deals, on that $16 million deal, they would have made $320K. On the $30 million deal, these guys, just for managing the deal, make $600K a year just for buying it, right? So just for buying it. $14 million they made paper gain without lifting a wrench, without doing anything, without hiring, firing, making any sort of margin improvement whatsoever. That's the power of EBITDA arbitrage. And it's really the foundation for how private equity builds wealth in these essential businesses. So if you multiply that by 50 acquisitions in 5 years, that's how $100 million businesses very quickly become billion-dollar businesses. Number 4, pass the potato, right? They're constantly trying to pass the potato. So the next layer that most founders never see is these private equity firms are building these platforms and they're selling them to each other for the most part, especially in the lower middle market. These platforms in the lower middle market are not suddenly going public, right? They're getting sold from platform to platform. It's why we've seen some really interesting things. So like an industry such as Pest, right? Pest might be in its 8th inning. Pest only has about 35 strategics that are still buying up Pest. That's still a lot, but HVAC has 150 strategics that are buying HVAC businesses. So they do start to eat each other, right? So they also can sell them just to each other, right? So Fund 1 buys your business, Fund 2 can buy Fund 1's platform for 15 to 17x, and then Fund 3 might buy it again 5 years later for 18 to 20x. So they keep making money just by selling the deal to themselves, right? Each fund gets paid on the markup, not on the growth. They get paid on the assets under management, the AUM, whatever the enterprise value of the entire platform is. So it truly is a financial relay race, and your business is just the baton that they're passing. If you sold at a discount early on, you're literally watching 3 different Wall Street funds make money on your company's spread while you're at home going, what did I just do? Who did I sell it to? Number 5, how do you flip the script? Well, you can't stop private equity from buying essential service businesses. They love essential service businesses. Here's how you can really make it work for you. Number 1, create competition. Never sell to the first buyer that calls you. Don't take a buyer introduction. When someone says, hey, I want to introduce you to someone else, they're making money on that introduction. You really have to run a process. It's why we exist. It's why we're in business. It's why we have case study after case study after case study for clients that are going, you guys are worth your weight in gold. You literally, your little fee that you charged me, I made 10 times that fee just based on the value that you brought to the table and how you made it a competitive process. We really encourage everyone, run a full process where multiple PE platforms are bidding for your business and competing to win the deal. Number 2, we got to focus on the structure. It's not just the price. Cash, rollover, equity, earnout. There's a lot that goes into actually structuring a winning deal for both sides. You got to tell a scalable story, right? Buyers are paying more where they can literally visualize the growth, right? Not only did they make money on paper, but they're going to make more money from the cross-selling, new service line, margin expansion, buying power. Know your adjusted EBITDA, right? So most buyers quote, off the tax return number. We are selling you off of a multiple of adjusted EBITDA. We rebuild your earnings and say, this is the adjusted EBITDA number that you can underwrite going forward. And number 5, we'd always say, pick the right advisor, right? You got to pick a sell-side advisor that really understands the game, understands the playing field, and knows how to leverage these buyers against one another, because it is competitive. It's a really fun game. I love what I do. I love working for my clients. I love making a Main Street business owner a multi-millionaire. I love when that wire hits, but you really got to pick the right advisor. So what does this all mean for you? If you are a founder selling an essential service business, this consolidation wave is your moment. Is it going away? I don't think so. Are valuations going to get lower? Maybe. There's always that risk. But right now, the market is hot. Hot, hot, hot. This is the hottest it's been since essential services have been in vogue. The multiples are crazy. Now is the time to cash out. Now is the time to sell. It's an opportunity that exists right here, right now. We encourage you, jump on the train. If you've got a parent that's retiring, if you're looking to retire, if you're in your prime and you just want to take some chips off the table, there's lots of ways to structure an arrangement that can make it a win-win. Not only now, we can put rolled equity in there, we can put an earnout, we can put that you get a second bite of the apple or a third bite of the apple. There's lots of different structures that happen with these private equity consolidators, these platforms, where you can really make it a win-win-win. So we encourage you, again, Wall Street's not evil. They're not evil. They're not trying to fire a bunch of people. They're really smart at playing this game. You need a sell side advisor that's also really smart at playing the game and can unlock that real value by decoding the deal structure, running a real process, and negotiating the terms that the Wall Street guys use to make a ton of money. So reach out, give us a call. I'm going to keep doing these videos. Shoot us a note, shoot us a question, ask us via DM, anything you want to know. We're here to break down the entire process of platform building in the essential service sector. Thanks so much.